Hi everyone, I'm back with the fourth episode of this month's weekly market insight series, coming directly from the capital markets trading desk at Sunwest Mortgage Company. So what's the scoop this week? Well, as we know thus far, the market witnessed extreme volatility in prices with the odds of a pause or even a bigger increase in the benchmark rate. The banking sector also witnessed turmoil as the Fed acknowledged more uncertainty in the economy due to recent development. Treasury Secretary Janet Yellen said regulators are not looking to provide blanket deposit insurance to stabilize U.S. lenders. The Fed and 5 other major central banks announced a coordinated action to enhance the provision of liquidity via U.S. dollar swap arrangements, increasing access frequency of 7-day maturity operations to daily from weekly. The U.S. Fed raised the benchmark federal funds rate by 25 basis points. The Fed raised the target range for the federal funds rate from 4.75 to 5%. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. Chairman Jerome Powell emphasized the Fed would not restrain from possible future rate hikes and tighter credit conditions until inflation shows signs of cooling. He also indicated that the Federal Reserve may not need to increase rates as much as previously expected, and additional policy firming may be appropriate. The committee will closely monitor incoming information, including readings on labor market conditions, inflation expectations, financial international developments, and assess the implications for monetary policy. Mortgage applications rose for a third consecutive week. The MBA Mortgage Applications Index rose 3% in the week ending March 17 after rising 6.5 in the prior week. Average 30-year fixed rate was 6.48 versus 6.71 in the prior week. Purchases were up 2.2, whereas refinances increased 4.9%. Applications for U.S. unemployment benefits unexpectedly declined for a second week. Per the Labor Department data, initial filings for jobless benefits fell by 1,000 to 191,000 in the week ending March 18th. Continuing claims were little changed at 1.69 million in the period ending March 11th. Unemployment claims continue to remain near historically low levels, and job creation remains robust. There are nearly 2 open positions for every unemployed American, as sectors including hospitality and food services struggle to attract and retain workers. Sales of new U.S. homes unexpectedly increased in February, suggesting the housing market is beginning to stabilize. Purchases of new single-family homes increased 1.1% to an annualized 640,000 pace after a 363,000 rate in January. Let's review how the housing market is doing, shall we? The median sales price of a previously owned U.S. home slipped 0.2% in February for the first time since 2012. This will offer some relief to buyers who are still facing high borrowing costs. With declining prices, the sales of previously owned homes increased in February by the most since mid-2020. According to data released by the National Association of Realtors, contract closings increased 14.5% last month to an annualized pace of 4.58 million. It seems borrowers are taking advantage of recent rate declines. An increase in sales is observed in areas where home prices are declining and companies are adding jobs. On a global front, the Bank of England raised its benchmark lending rate by a quarter point to 4.25%. Investors are expecting at least one more rate hike later this year. Let's wrap it up. Fed assured that the U.S. banking system is sound and resilient. Recent developments are likely to result in tighter credit conditions for households and businesses. As Powell said, such a tightening in financial conditions will work in the same direction as rate tightening. They will be committed to achieve maximum employment and inflation at the rate of 2% over the longer run, and will go for further rate hikes if required. So what do you think would be the next increase in rate hike? Share your thoughts with me in the comment section below, and stay tuned. Well, that's all we have for this week, guys. And as always, stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Have an awesome Friday, everyone, and an even better weekend. Buffy, out.